balance sheet, because we strongly believe at BlackLine that if you have a clean balance sheet, you have a cleaner P&L, and therefore your financial statements are cleaner. So you're actually committing to the figures to the investors, to management, to auditors, and being able to sleep at night knowing that there are no horrors in there, no nasties that you haven't spotted or haven't been explained, which, you know, they always tend to rear their ugly head at the year end when the auditors come knocking on the door. So what I'd like to start off today is to talk about actually the trends in automation and visibility and why we're moving towards that, what we can do about that, maybe kind of thinking about the broader marketplace. So what are your competitors doing? And actually just giving some thought as to how we can align the process, best deliver the automation and visibility. I think we all know what the benefits of that are going to be, but maybe if we look at how things are done traditionally and some of the problems this causes, that's going to clarify the need to move away from a manual, often Excel-based approach. So you may see a number of words popping up on the screen here, which resonates to the way that your financial accounting process works. Not all of them all of the time, but certainly we find that bringing together all of the key factors, all the elements, if you like, of an efficient finance and accounting process is driven really by the people. People are key. They often have processes in place. Certain companies, certain countries even rely more on processes. Others will rely more on people in the background with the knowledge that they bring. So it's the communication between the people, between the technology, bringing those processes and aligning those, and actually capturing all of the communication between the different parties in a format that's going to be useful to explain the figures that are reported. And that's really the essence of the whole kind of finance and accounting process. And why are we doing that? Well, a number of reasons. Obviously, we want to go home on time. We want to explain to investors, the owner of the company, how well we are, or if we're not doing as well, to get support. But actually, of course, for regulators, they are there to make sure that things are happening, that the rules are being applied. And how do they see all of this? How do all of those key stakeholders see this? They see this via reporting. Now, trying to bring all of this together. I mean, there are so many lines of communication, so many workflows, so many areas where the ball can be dropped. You know, it looks like a big plate of worms, a plate of spaghetti. It's something just impossible to keep on top of. Hence why we need automation to come in and actually help with that, to track that, to bring in automated workflow and to really align these processes. Because on top of this, you actually want to start being a bit more selfish and thinking about yourselves. I, for one, didn't qualify as an accountant well over 20 years ago to spend my life doing balance sheet reconciliations and really just making sure that reports were sent to people at the right time and documents attached, etc. We've got systems here that can do this for us. So it frees up your time to focus on actually more strategic value-adding work, to be more of a business partner with people outside of the finance function, but also going to enable you to go home on time to spend time with the family. And I guess an additional element we haven't yet captured in here is, of course, the horrible coronavirus. When that kicked in, it meant that all of a sudden many of us were having to suddenly, with little notice, work from home. That some of our customers, suppliers, etc., were also working from home. So that needs to be factored in. Really being able to work remotely is seen as the way forwards. It's not sustainable to try and manage a process like this. It takes too many people, it's too much stress. There are too many balls being juggled in the air at the same time. And certainly when the coronavirus first kicked in, we saw that a lot of people thought, I need to do something about this. I need to actually now take the bit between my teeth and actually have a system that can manage most of this for me, i.e. bring in automation. It seems that really, as people first started off struggling with the remote working world, or still trying to hit those same deadlines, we weren't given extra time to be able to submit the figures. When that first happened, we managed to get our head around it. We've now managed to get to a place all these months down the road where we can manage to do this, with different degrees of success. However, now is the time, as business volumes are slightly reduced, to think about how we can automate this for when business picks up again, and prepare in case this ever happens again, if there are further lockdowns, further issues which could actually trip us up in the future. Now is the time. This is what we want to do. And we're seeing many of the companies that aim for best practice in the marketplace actually doing this, really considering how they're automating their solutions and bringing all of these departments together. Now, we've done some research on this, and we've actually found out, looking with Frost and Sullivan, that in fact, if you don't align your processes and you do drop one of the balls in this process, what can happen here is that actually the mistakes that are made in accounting can cost a frightening amount of money, $5 trillion, in fact, which is that nearly the turnover of the US? I mean, those are the kind of mistakes globally that are being found. I'm sure there's an element of extrapolation going on here. However, these are the kind of figures we're talking. So hence why we believe it is material. It's so important we talk about this, have a plan B in place, a kind of backup plan, and prepare for the future. Really get this as part of our day-to-day life and do it now while we have this opportunity to address those items. So why do we believe that manual accounting, the spreadsheet-driven process, relying on emails and word of mouth, is not sustainable into the future? Well, there are a number of elements to that. What we see time and time again is that actually people cannot afford the time any longer to simply use a manual process where they are repeating steps period on period. In many cases, that might be day on day on day. It's too much time being spent. The bottlenecks that this causes really do cause undue stress and, of course, inaccuracies within the figures. And the Hackett Group identified this as being, the number one bottleneck is really driven by the manual effort required. So nearly 70% of people agreed with that first point. 55% are not completely confident in the numbers that they're producing. In other words, they can't hand on heart say they are definitely capturing all of the financial errors before the figures go in. As an ex-accountant, I remember that horrible thought of waking up in the middle of the night and thinking, I haven't put that number in, or there's a hole in my account somewhere, I just know it. It doesn't help you sleep at night. It raises the stress level, and the risk in there only tends to come to light when the auditors are in. It's just Murphy's Law. It's how these things happen. Of course, if you want to address the time issue, you want to address the risk issue, there's a cost element involved, and actually employing more people, throwing more bodies at the problem is rarely the solution, especially because people go on holiday. We are human. We go on holiday. We change jobs. We occasionally, every once in a while, we get sick. This is a cost that simply companies in a competitive market environment cannot bear any longer. It has a massive impact on the bottom line, and really those who are addressing this are reducing their cost base, being more efficient and more competitive as a result. Of course, the element of investing time and the risk there that causes stress and the pressure on headcount costs does tend to lead to an impact on morale. Accountants are often accused of not having the most interesting jobs in the world, and so they don't necessarily want to be doing the same thing time and time again, with pressure from above, always looking over their shoulder that their particular role is at stake. My recommendation is that you really need to kind of upskill and start delivering more value-added analysis rather than repeating the same boring, journal entry, the same low-level reconciliation. Let the system do all of that, freeing you up to focus on the ones that are more value-add, that actually use your accounting experience and qualifications. It's going to help increase the morale around the office. Take the lead, do this, engage with the rest of the team and also with your accounting process. And the way we can really look to deliver this is by looking in the marketplace for a unified, automated, continuous process, one that actually allows you to bring different elements in that you want to address in your current accounting process onto a single platform. In the next section, we'll be talking about how the cloud can deliver that. But ultimately, we're looking for automation. The higher the percentage of automation, the more free time you have. How you choose to use it is obviously entirely up to you. We can make suggestions, but very much tongue in cheek. This needs to be continuous. This needs to happen all period. It can't just be a period end focused process, or you're never going to achieve being able to, in real time identify where there are issues and get everything done by the period end close. The timetable for those period end close final shutoffs, if you like, the time frame that you close down your period in your ERP. The time pressure on that has increased, especially during lockdown, when people want more time to analyse the figures purely because of the increase in risk element. So how can we find a solution which is not only unified, but also automated and continuous, that allows people to work together, even in a remote working environment during COVID times, in a collaborative fashion? Because of course that's important. We need to work together as a team. You know, the 1 + 1 = 3 mantra, that actually you get more out of people if you combine them in teams. You know, you see it in sport, you certainly see it in finance departments. You know, it's proven to be true repeatedly. If we can work together as teams, if somebody is off sick, you're not then going to be coming back to a full desk of work. Other people will have been able to cover some of your work while you're off, and it's all much more manageable. This is what we aim to offer in a modern accounting environment. Don't rely on Excel spreadsheets, move away from that. I'm not saying we entirely move away from spreadsheets. I am a human, I am an accountant. You know, there'll always be elements of spreadsheets, but maybe keep those for the easier things, for the things where you know, you don't tend to need to have any automation. So here are some of the well-documented problems of using Excel. I think we've all come across this, where somebody, you know, some well-meaning accountant or whatever, has hard-coded a formula, and therefore you can't see where the figures came from, how it was generated. It's just hard-coded. It's not substantiated. There's no backup for it. It's a bit of a nightmare from a managerial, from an audit, from really kind of fellow accountants perspective. We want to avoid people adding in numbers and simply changing the font to white, thinking it's become invisible, and in many cases it does. These are big issues which, you know, back in 2008, this brought entire companies to their knees, these kind of problems. So hiding of formulae, sheets, etc. You know, what does it take to balance mentality, WITTB. It's actually saying sticking in a number just so that my reconciliation balances totally goes against the grain, the whole point of what the reconciliation is there to do. That's why we believe the 1980s technology that is Excel has had its day in 2021. So really, what do we see as a solution? Where is the market moving to? At the moment, we have the answer in terms of the world is moving to the cloud. Initially, there was a bit of concern about the cloud and the security around it, but most of the time when we speak to our customers, the security that is now offered around cloud solutions, particularly focusing in the finance area, that security is actually far more advanced, better managed, and always continually being updated compared with those on-premise solutions. Hence why you'll see these astonishing figures here of all the kind of instances where people have moved to the cloud. So if it's something you haven't done yet, I'd seriously consider it. The flexibility is there. It does make for a very cost-effective option, because you're not having to provide the server functionality, the management in terms of IT staff and software to protect it against hackers, etc. That's all being done by the cloud providers. It allows upgrades to happen automatically and remotely. You know, you can therefore really enable remote working, etc., all by being able to take a software as a service approach or cloud approach to the way that this is delivered. So, you know, definitely consider it if you haven't. And for those of you that have, but not in the finance arena, really, this is where it's at. This is how we're going to be able to gain some competitive advantage, see strong returns on investment, be able to tie back the timeframes that we are rolling out projects and actually delivering figures ultimately further up the chain to the key stakeholders. And what does this actually look like? Well, it's bringing together really any readable data source that you want to work on, a combination of your ERPs, a combination of your consolidated figures, your CRMs, points of sale systems, whatever you want to bring in, any readable data source, we can bring into cloud-based technology. And what this will allow you to do is to allocate the work out more effectively to those who actually need it, combining the groups of people you'll see in the blue boxes at the bottom of the screen into more effective teams, really to make sure it's better managed, it's more effectively managed, and we're therefore addressing those bottlenecks as part of the process, which was number one on the time challenge that the Hackett group identified. So not only aligning the data flows, making this process automated, saving time in the first instance, it's actually saving it in the cloud in the middle, and you'll see some of the security certificates around the cloud financial data storage piece. We're also being able to make sure that the work is allocated out effectively in the most efficient manner, with teams working on this, covering each other as they go. So hopefully that gives you a little bit of insight into the market, where it's going, some of the steps that have already been taken, and giving you a little bit of food for thought as to areas you might be able to consider from your finance accounting process going forwards. The second part of this presentation is talking about the insights that we see in the marketplace into the technical side for these types of solutions. So actually, what we're going to be talking about here is really looking at the broad brush kind of solutions in place that can be offered to the marketplace as a whole. Again, it's sticking with the theme of looking for a unified, automated and continuous process, because what we'll aim to do is take those feeds of data on the left-hand side, the ERP, subledger, etc., and actually bring those into those cloud-based systems on a regular basis. You'll see in the middle, in the white font with within the gold circle, that once the data is brought into the system, automatically any decent cloud-based system will be applying rules and business logic, which is the kind of 2021 version of trying to build bots or apply RPA. It's the more modern approach to that, whereby rules are captured in the system, which can be defined and managed by accountants. We're not looking for people in IT who have a degree in computer science. We want accountants who understand how this process should work, who can then apply simple rules, which the system will then pick up and apply time and time again. So the process is written by accountants and driven by the system. So it gives visibility into the process. It's taking a templated approach, so it's consistent, it's industry best practice, and it allows auditors to be able to remotely access this process and make sure that everything is as it should be. So they look at the rules, they're not looking at the numbers as much. So it's saving time for them. It's obviously saving time for people in finance, because the work can be captured themselves, and then it's pushing it out to all of these the areas in the blue circle, all of those different areas which can be combined in a cloud-based unified platform to deliver together, such as analyzing variances, completing reconciliations, journals, task management, etc. All of those pieces around the period end close that really cause you stress, take time, are risky, and ultimately cost the company a lot of money to complete. So we can automate those, typically get anywhere kind of 40 to 80% automation, which you can then really spend on more value adding areas. So this is what the process looks like. It's bringing the data in, it can match data. It's powerful matching, typically around 1 million transactions a minute, and really giving powerful feedback through the reconciliation process, supported with journal entry and allocating out outstanding items as tasks. Pretty simple. So this is what we can do in a cloud-based solution. So always happy to go into more detail at the right time, but time is pressing. What I'd like to just focus on quickly is the difference I mentioned before between RPI and a rules-based system. Any system worth its salt, any system worth considering, will have rules built into the system, and these best practice rules will enable you to apply these very, very quickly and consistently. You don't want to spend your life actually building this process. You simply want to be able to tick a few boxes and get up and running. So in decent cloud-based systems, it's a case of simply ticking the box on the left-hand side, applying rules to this process and letting the system apply those consistently, time on time. When I implemented this system, we actually managed to achieve 80% automation across 5,000 balance sheet reconciliations that were previously being prepared on a monthly basis. And 80% automation was, well, it was unparalleled. We'd never got that kind of saving within a 3-month window. So yeah, absolutely fantastic results. And actually taking a templated approach, taking industry best practice templates that have been built with the big auditors out there. We can obviously make recommendations based on today's presentation. Of course, just taking that approach based on the accountants who work for BlackLine and others. My final point is to consider what's the difference between substantiation and reconciliation. Historically, my accusation is that a lot of people will say, here's the balance I'm reconciling to, here's a list of the transactions that make it up, I've reconciled it, wonderful. Doesn't add any value at all. So my suggestion would be you want to substantiate it. You want to explain what makes that balance up and justify it, providing documentation and commentary. Until you can do that, how can you justify it should be a part of your balance sheet? And as I said, if it needs to be corrected, you know where the impact is going to be. It's going to be on the P&L, and that's why it's important. I'm sorry I've slightly run over time. I'll now hand back, and Tamara, if you're there, thank you very much for listening today. Look forward to your questions at the right time. Rumbi, if you're with me.
Hi, Josh. Thanks so much for that. Plenty of information covered. I think before we go to the audience's Q&A and before we hear from Rumbi, I've got a few questions that have come up. I think we'll go through a few of them, and if we've still got time, I'll address the additional questions a bit later. So can you tell me, are these trends specific to a certain vertical?
No, I mean, it really is kind of universal. You know, every company has a finance department, and historically, we've all relied on Excel spreadsheets, and it's always the weak link in the chain where you've got ERP systems and you've got consolidation systems, CRMs, audit systems, etc. It's often the case that Excel is the glue that semi-binds them together. Unfortunately, glue has a bad track record of falling apart at the wrong moment, and Excel's the same. I'm not saying don't use it, I'm just saying be well aware of the drawbacks of using it. And if you think you're spending too much time on spreadsheets, then A, you're not alone, and B, consider a solution that can really help resolve that.
Perfect. Thanks, Josh. And then how long would it take for the implementation process?
It depends what you would like. I mean, cloud-based systems, SaaS software, so software as a solution, is actually much quicker to implement than the old kind of on-premise solutions. We typically say anywhere between I'd say kind of 3 to 6 months. Some of our more intricate products can take a bit longer once you've got that foundation in place, and it does enable you to then bring on more intricate products with ease. But certainly, if you've got a burning platform, if you've got a goal in mind, we can work towards that. I would say 3 months is probably the starting point, which is, you know, for a big project that delivers such large automation benefits, pretty quick.
Perfect. I think I'm going to put my questions on hold for now. Josh, if I can ask you to stop sharing your screen, and then I'd like to invite Rumbi onto camera, and we're going to hear about their journey. Perfect. Hi, Rumbi.
Okay. Hi.
And then we'll chat in a few minutes.
All right. Thanks, Tamara. Hi, everyone. So I'm feeling a bit nervous today, but I realized that at least I'm not the one delivering the State of the Nation address tonight. So that made me feel a bit better. Also, the fact that I quite enjoy using BlackLine. So explaining our journey will actually it's something that excites me. So just a bit of background on me. I'm the senior manager for Deloitte Africa reporting. We sit in our central finance team of Deloitte, and we do the reporting for the whole of Deloitte Africa. We have been live on BlackLine since January 2019. We started the process in about October of 2018, and we're currently preparing 3,700 recons across Africa. Obviously, that has some built-in efficiencies, but I don't have the numbers with me at the moment. Okay, so before we implemented BlackLine, our balance sheet recons were being prepared at a business unit level. So we have hundreds of business units, but they need to roll up into statutory entities, into countries, into regions, and ultimately into Africa. So when we started out, before we had BlackLine, our recons were being done on a tool, an in-house tool, but it essentially was Excel schedules. So we couldn't attach supporting schedules to the actual tool. For sign-off, we had to print out the recons, and then once the recons were printed, to get them to us for review purposes, to send them to reporting team for review purposes, someone had to send them through or courier them. And thank goodness at the time we were just Southern Africa reporting, which is South Africa, Namibia, and Botswana. So I can just imagine if we had to do Africa reporting when our systems were like that. And also just to put it into perspective, we realized as we were moving offices last year that we had so many files that had accumulated from the years. So it made it very difficult to find information, especially when it's required, especially at year end, for example. Okay. So we realized as our business was growing and we were starting to report more on Africa versus Southern Africa, it became apparent that we were going to have a bigger problem due to the fact that you have such high volumes in recons, which are so aggregated and are sitting at the business unit level. And imagine bringing in 11 countries to try and get those files to us, to get sign-off done at an account level was next to impossible. Also, what was adding to it was the different accounting systems that the other African countries were using. So at the time, we went live on BlackLine, we were still using our SAP ECC solution. However, we're now on SAP S4HANA Cloud solution. Okay. So, but the rest of the countries in the rest of Africa were using different accounting softwares. However, luckily enough, we then embarked on a pioneering project, which is our SAP S4 Cloud HANA solution, which we subsequently implemented across Africa. Okay. So having a consolidated view of recons from an Africa level would not have been possible with our existing systems at the time, because you needed to be able to roll up the recons for the CFO to be able to see what recons were being done perhaps in Nigeria. She needed to be able to have that view. Also in the context of what does the Africa balance sheet look like? And not having sight of what was happening in the different countries without having to call someone and asking them to send through their recons, their Excel spreadsheet, their support, this was not going to work well with the direction our business was going. So when we started the S4HANA journey, an opportunity then came up as we were assessing what we could do on the S4HANA journey. We realized that there was a gap for balance sheet reconciliation, and that's where BlackLine then came into the picture. So because BlackLine is also partners with SAP, we were able to look at what can we do with S4HANA that we can't do with BlackLine, and we managed to realize that the balance sheet reconciliation was definitely something we needed a separate tool for. And I guess this was exciting because now it gave us an opportunity to find a tool that worked better than Excel spreadsheets and manual documentation. Okay. We basically, the other reason we implemented BlackLine at the time as well was because we wanted to clean up our balance sheets before we migrated across to S4HANA. And the way things were going and the way we were doing our recons and spreadsheets, it was not going to be possible to do the cleanup and do it effectively. And also, I think at the time, I mean, at year end, I used to have sleepless nights because you actually are never sure if you're actually reconciling 100% of your balance sheet. Because if someone's sitting with an Excel spreadsheet on their desktop and someone else is sitting with another one, to collate all that information across various countries, various business units is very difficult. So it was a problem that needed to be addressed, and thank goodness we went on this journey with BlackLine. So we kicked off our implementation process in August 2018 with a small project team, which was mainly consisting of accountants, funny enough, and a few IT people. So I think Josh made that comment around this is a solution for the people, the accounting people, and not necessarily the system. So we needed to be part of the project in order to structure our solution in a way that adds value to us and works in terms of what we were trying to achieve. We also did our implementation with the future and knowing that one, although we were on SAP ECC at the time, we were going to move on to S4 HANA Cloud. And also we're going to bring in other countries that we never had sight of before. So phase one of our implementation was supported by BlackLine fully. We had a very entertaining implementation specialist who was based in Europe, who was helping us from BlackLine. He was always available on calls and even emails if we needed things outside of our monthly calls. He also worked at our pace. So our implementation lasted, say, 4 months until we went live. And I think it took that long because we're also implementing S4HANA Cloud at the time. So the same people who were on the project team were actually the same people who were also on in that project as well. So we had capacity issues. So that's why for us it took longer. But I think if we had people dedicated to the project 100%, it would have been much faster. Also, the same people had their normal day-to-day accounting jobs. Okay. And then from an IT perspective, the support that we needed from IT was how do we get data out of our SAP at the time and then subsequently S4 into BlackLine, because we wanted a situation where we're able to rely on the data that's in BlackLine in such a way that we know that 100% of our balance sheet trial balance is actually being reconciled at whatever level. And there's no manual intervention between how the data gets out of our ERP into BlackLine. So that also helped with the process. Okay. So the implementation specialist, we had contact with them via phone, via email, calls at the time. And I guess we're ahead of the time because now with COVID, it's basically what we're doing now, but we were doing this like 2-3 years ago. The implementation specialist helped us with building our structures based on his experience and best practice. So we did go through a couple of iterations in the system where we were testing and trying to see if the solution would work based on our structures, and also having a forward view in mind, knowing that we are going to bring in other countries and knowing that we're going to be changing ERP system from from SAP to S4HANA Cloud. Okay. So when we were setting up our systems, that took us a bit of time, but we managed to get it right. And then after a few tests, then we were happy with the results, and we managed to put it live into BlackLine Live. So now with training, we managed, the implementation specialist managed to train all our users via Skype. So that also reduced, obviously, if we had to go and book meeting rooms and do proper formal training, because the training is quite fast. It really was a few hours, like I think 2 hours for preparers, 2 hours for reviewers, and everyone was basically trained up. And the guys, obviously, because the tool itself is quite easy to use and it's quite intuitive, we're able to actually go in and play around in the testing environment, in the sandbox, if they were unsure, before they go in to use the live system. So the training went quite well, and we upskilled our users. I mean, currently we have about 80 users across the continent that are on the system. Okay. So that was phase 1 of our implementation, and that's the one that took us from August 2018 to January 2019 when we went live. Phase 2 of our project was now changing from SAP to S4HANA for South Africa, Namibia, and Botswana. So that element was much easier because we had, number one, cleaned up our balance sheets. Secondly, we had the only change that actually needed to happen was new account numbers, because we set up our structures in such a way that this change wouldn't require us to rebuild the structures that were already in place. And also now we had people who actually knew how to use the system, because I think they had been using it for like 3-4 months before we migrated into S4HANA. So that helped quite a lot. And then we had our final phase, which was basically implementing the tool across Africa to the countries who were new to SAP, essentially, and obviously new to SAP S4HANA Cloud, which were the rest of Africa outside Southern Africa. So we managed in phase 3 to get, I think, additional 9 countries on board. For that phase was much easier because all we needed to do was just add on the new countries and set them up, bring in new users. So we actually didn't need that much support from BlackLine at the time. So we managed, our project team actually managed to train up all users in the rest of Africa. And we also provided support for them as well as we're going through the process. So I think like, I mean, we were ahead of our time as well, because I mean, now with working from home, doing trainings online is actually something that's now natural to us. But at the time, it's actually brought a lot of convenience for us. Okay. So currently now, after our implementation went successfully, we now have 11 countries, all of the countries that are on S4HANA Cloud, who are preparing recons and getting them approved in BlackLine. They're able to attach documentation. So for the first time when we had all these countries live on BlackLine, from an Africa perspective, we were able to, for the first time, see all recons across Africa, and the balances which agree to the trial balance with supporting documentation. And we're able to see the recons in reporting currency from a South Africa perspective, because our reporting currency is South African Rand, and also in their local currency, because they actually prepare the recons in their local currency with all the supporting documents attached. So this was quite good, because this wouldn't have happened before if we had still been on Excel. Okay. So now that we've implemented, there are still some efficiencies that we're still trying to bring in, but currently the benefits that we're getting from this is that we are able to report our balance sheets, and we've set up our system to get our trial balance directly from our ERP source. So ideally, we are actually able to load our trial balance every day. We do our balance sheet recons monthly, but the capability is there for us to load our data daily. One of the other benefits is that each of our balance sheet recons is accounted for and is assigned to a preparer and a reviewer. So this helps with accountability, because in our old processes, we were never 100% sure that the recons were being prepared. All of them were being prepared. And then secondly, if perhaps there could have been assumptions where you think a recon is being prepared centrally, but actually it's supposed to be reconciled at a business unit level, but everyone just leaves the recon because the accountability isn't set as in who is supposed to prepare the recon. So that's an added advantage, that you don't miss any recons sitting out there somewhere, where I think Josh mentioned the word horrors, that you then pick up only at year end. So we kind of know exactly who's sitting with which recons. One of the other good things was also around segregation of duties. That's also implemented in the process, which helps because you cannot prepare and review the recons. So this assists us in seeing if all our recons are being prepared and are being reviewed at the right level, so that by the time it gets to the reporting team, we know that the balances that are in our balance sheet are actually accurate and complete. Okay. Another advantage is the CFOs and executives can now see balance sheets holistically and are able to see the recons and the support in the system. They can go down to the detail of where the recon is prepared as well if they want more details. And they can actually also leave comments for action items for the preparers and the reviewers, and also ask questions. And we set it up such that it sends an email to individuals, like a comment email to the individuals that it's addressed to, and it comes into their Outlook, so they can also see that and the issues get addressed. This helps, especially at year end, when you're doing reviews of the recons for balance sheet finalization and financial statements. Okay. One of the other benefits we've had is, like, I think Josh spoke about the optimization of certain things. So we've brought in our subledger, which is again coming through automatically from S4HANA Cloud and coming into the system. So our balance sheet recons that are prepared on subledgers automatically certify. So then that brings down the number of recons that you need to do, because we find we've got reports elsewhere, we've got SAP S4HANA controls and subledgers, so we're happy to do automatic reconciliation of those accounts. We've also built in some efficiencies using groups as well. For example, intercompany groups, which obviously doesn't make sense in the sense of preparing those reconciliations at a business unit level. You need to combine both the debits and the credits, and then they're technically supposed to net off to zero intercompany. So that's how we reconcile them, and if there are differences, then you add you do the reconciliation. But if it doesn't, then the account automatically certifies. So this helps, especially with reconciliations that are across multiple companies, multiple currencies as well, that you're able to then prepare like basically a recon with multiple companies, with multiple countries, sorry, and it's able to convert it to the currency that you want. So this helps quite a lot with efficiencies. We also group certain accounts that only make sense to reconcile at a statutory level, like your retained earnings as well, and that, for example. So we're still on this journey of trying to build in even more efficiencies, but currently, from where we started, these would have been things that would have been difficult to reconcile. And because of the different needs, so for example, some accounts need to be prepared centrally versus some accounts that need to be prepared at a profit center level. So we've structured our recons in such a way that you assign the accounts that are done centrally to one person, but the guys in the profit centers where the balances actually sit are able to go into BlackLine and see their balances and also verify that their recons are actually being reconciled somewhere. And we don't have this black hole where accounts are sitting without anyone reconciling them. Yeah. So, that's where we currently are. So going forward, we are planning on building more efficiencies through more groups. Also templates are quite interesting as well, and we're looking into those. The interesting ones, like for example, for prepayments, accruals, sound interesting to us. So we are looking into that. And then also from a reporting perspective, that's something that we also are trying to get to so that we can do our reporting straight out of BlackLine as well, specifically for the balance sheet. So because currently we're looking at it on two systems. But yeah, so that's our journey so far and where we are. So yeah, thank you so much for listening. So thanks.
Thanks so much, Rumbi. Josh, if I can invite you to come back on screen, I see a couple of questions have been raised by the audience. So before I go back to my questions, I'd like to address the audience's questions. So firstly, Botwe Kradier has asked, I use an ERP system called ITS. Would BlackLine be able to read data from this system?
Absolutely. We pride ourselves on being able to link with any ERP system. Our recollection is to date, we've got around 80 different types of ERP systems that we've linked in with over the years, and all instances of those ERPs as well, multiple ERP landscapes. The record for the most ERPs for one customer is 120 ERPs, which is quite, yeah, exactly. That was my face when someone told me tomorrow. It's any readable data source. Hence why we love the fact that the cloud is so open to really connecting with these systems. So definitely we can connect with them. As long as there's an output from a system, we can connect with it. We can bring it into BlackLine. And that's where the automation gets applied, the work gets allocated, and all that good stuff we spoke about earlier. The magic can be applied.
Perfect. Thank you, Josh. Botwe, I hope that answers your question. And then Grant Maury has asked, is BlackLine suitable for small, medium enterprises? That's
a great question, Grant. I'm actually in the mid-market team at the moment. So yes, very much so. We have a modern accounting playbook, which is the way that we group together the different products. And this enables us to roll that out for small, medium-sized enterprises at speed. So really, we've got customers ranging from 2 users up to many thousands of users and everything in between. So it enables those companies who are looking to grow to support them without having to bring in as much additional resource. We work with a lot of companies like tech companies and other companies who are seeing stratospheric growth, and we're there to support that to really help you on your journey. So very much so.
Perfect. Thank you, Josh. Let's have a look. I see we've got another one. Again from Botwe. Does BlackLine handle supplier reconciliations as well?
Yes, it can do. It can reconcile any data. So anything you want to get visibility into, you want to tie back to a balance, you want to be able to see, what are the elements making that up, and group those items, support those items, comment on those items, share those items with the key stakeholders in the business. Absolutely, we are there to support that. So yeah.
Perfect. I see a couple of questions are coming in around the cost of the implementation. So definitely opportunity to pick up those conversations with those individuals. So we won't go into that right now. Josh, back to while the audience is still putting through their questions, I highly encourage that. And I'll go back to some of the questions that I had from when you did your presentation. So basically, if an organization has a really old version of Oracle, could you still connect to that?
Yes, absolutely. Again, it's as long as there's a readable data source, we can connect. We do work with IT functions. If you want that process automated, it's just thinking about how does the data get out of the system? How can it get to an area where BlackLine can pick it up? Many companies like to do that via SFTP or API. We can work to build more formalized connectors. It's a conversation we love having, and that sounds a bit strange to say, but you get the gist. It's there to kind of make this process as automated to get the data in, as well as what you do with the data once it's in. So yeah, versions of Oracle. We've got a very large Oracle client base already at the moment. So very experienced in that area, and we're an Oracle partner as well, which it enables certain privileges in terms of understanding how to get that data out, etc. So let's have that conversation.
Perfect. Thanks, Josh. And then another question that I have is, you spoke about automation. So what kind of levels can you achieve, and how do you measure this?
Yeah, so when we look at automation, it covers a number of areas in that area between the data that's captured in your ERP system and the reports that you're presenting to management. So that white space in between, which is typically where Excel works, that's where we're going to provide automation. So reconciliations, journals, task management, etc. The flux analysis process. Historically, we've seen 40 to 80, 85% straight out of the box for reconciliations. We've got stories of journals going up into the high 90s for how we can automate that. We're having to create the same journal every month. We've got clever software that can look at a scenario and create a suggested automatic journal for users to review and approve. Task management, again, that tends to be anywhere kind of 40 to 60% automation. Flux analysis, similar figures, and we can prove those out with case studies we've got. Always happy to share those. Again, my experience was that we managed to achieve 80%. I guess if you've got a very clean balance sheet and your process is very well tied down, the percentages might be lower, but actually, they'll be higher if there is more we can do to help. So, that's my slightly convoluted answer.
Perfect. Thanks, Josh. I just see another question has come through here from Machidiso. The extent to which BlackLine supports the AFS reporting, preparation of audit file, and workflow. So I think they're asking the extent of that. Absolutely.
So we have a task management solution, which is the perfect place to be able to manage all of those items that are going to be shared with the auditors, often called the provided by client list, or PVC list. It's a great area for auditors to be able to, in a read-only capacity, go in and help themselves to information uploaded there, at the same time that the system will automatically tick off that you've shared that information with them. It means that auditors don't have to come into the office as often. It means that there's not going to be repeated requests for the same data. It clearly sets out the timetable of when these items are going to need to be delivered. You can then manage that around your year-end close timetable, month-end close timetable, etc. And it can be done in any format. There's reporting built into BlackLine, so we can build reports to be able to report on anything that's held in the system. I'm always happy to work with you on those, and it's intuitive enough that actually users can build those reports, save them down, schedule them, share the info as you see fit.
Awesome. Thanks, Josh. I think something else that's prevalent amongst our community conversations is the topic of cybersecurity. Very topical, very relevant. So my question is, what security do you offer around your solution?
Sure. I mean, security is always going to be key for a cloud-based tool. For any system that captures data, security is where it's at, and we are very focused on the security angle. This might not mean much to you. I confess I'm not entirely sure of the details myself, but I know that we are ISO 27001 compliant, and that makes us fairly unique in the marketplace. It's something where you continually have to increase your security arrangements prove it, and we're externally audited to confirm that we comply with that. We're also SOC 1 and 2 compliant. There are ISAE with a whole lot of numbers after it that we're compliant with, and others. We always love to have that, not with me, you probably guessed. We always like to have that security chat, purely because it kind of proves the integrity of our system, proves that you can put your data in our software and it's going to be more secure than if you kept it on premise, because we've got a team of worldwide experts working on this, and it's always up-to-date security. So we take that exceptionally seriously.
Good to hear. I see we're almost out of time, but one last question. Where is your data held in the cloud?
Absolutely, always a good question. And we separate it very distinctly between data held within the US and held in the EMEA region. So at the moment, we have it separated out. It's actually held in EMEA. So we've got databases which are private clouds for us that are held in the UK and in the Netherlands. So we have good geographical separation between the two data centers. It's our own little private cage. No one else has access to it. We don't even have access to your specific data. But that does mean that it's very, very secure in the EMEA region, and we have feeds to kind of more local providers as well. But always something, again, we can have that conversation with your InfoSec team.
Perfect, Josh, thanks. And I see we are almost on the hour. So to both Josh and Rumbi, thank you so much for your time. Rumbi, thanks for your case study of your journey. It's really been interesting. And Josh, thank you for all the insights. To the audience, thank you for joining. I really appreciate it. Sorry if we couldn't get to every single one of your questions, but we will try and come back to you as soon as possible. Future webinars that are coming up over the next few weeks is 4 big moves finance needs to make right now. That'll be in collaboration with Oracle. And thereafter, we're going to have Future-Proof Your HCM and Save Money, hosted with Nedbank CIB. So please be sure to go to our website, check it out and register. And we'll see all of you soon. Thanks, everyone. Keep well.
Thanks, everyone. Bye.
Bye-bye.